Hey everyone, it's Matthew. Today I'd love to teach you about how not to get taken advantage of when shopping for a home mortgage. It can be a little overwhelming sometimes when you're talking to different lenders and they're throwing different things at you like origination charges, admin fees, processing fees, underwriting fees, certain things that are closing costs versus certain things that are lender paid fees. Yeah, I get it. I remember when I first got into this, it was a little overwhelming. So how do you make sure you're getting the absolute best deal you can in the financing world? Well, first thing you want to do is when you're comparing lenders, you want to make sure that you're getting zero origination fee. Sometimes that's called a par rate. So any lender can talk your ear off and say that they give you an amazing low rate, lower than what you've seen out there, but they're going to charge you for it in origination fees. The way that works is they can bring your interest rate down, but you got to pay for it in origination fees. And when they say an origination fee, and it's like 1%, that's 1% of the loan. So if you're buying a $300,000 home, that's a $3,000 hit you're gonna have to bring to the table to get that smaller interest rate that goes down. Sometimes it's a good choice, sometimes it's not. You really kind of have to do the math to see if that's really what you and your family need. Obviously there's a monthly savings, but there's an upfront cost to get there. So you kind of have to do the math to see what the break-even point is to make sense. Just keep in mind, most Americans sell their home about every 7 years, and so you want to make sure that if you are buying the rate down, is what it's called, that you can make sure you're making money before the 7-year period, or maybe you might want to refinance it. So a lot of times it doesn't make sense to buy down the rate. But again, a little bit of a side tangent there. When you are shopping your lenders, you want to compare apples to apples as much as you can. So make sure that you're comparing origination fees. Just tell them, I want zero origination fee. What's the 30-year rate that you can give me today? And you always want to compare rates on the same day, because rates do change daily, sometimes even AM to PM in a day. So if you are again trying to compare, try to make it as apples to apples comparison as possible. Other things that lenders have control over besides origination fee, all of them have what's called either an underwriting fee, sometimes people call it a processing fee, or an admin fee. So they range, but adding all those up, they should probably be around $1,000, but each lender is a little bit different. So that is something that they do have control over. So that's one thing that you can compare. Things that are outside an appraiser, a lender's control is the cost of an appraisal. That is sent out to an outside source, and that can be anywhere between $500 to $800. Some appraisals, like a VA appraisal, it's a little bit more than a conventional appraisal, but just know that the lender doesn't really have control over that. They will have to put it on their sheet that says, hey, this is what we expect it to be, but really it is a little bit outside of their control. Home insurance. Obviously the lender doesn't control your home insurance, so you can't compare them. They do have to put something on their paper that says this is our estimate, what your home insurance will be for a price point of this house, but just know that you have the right to shop around your home insurance, and of course you might get different coverages, and so they will again give you an estimate, but that's on you. So comparing lenders' estimates does you no good. You want to just compare what lenders have control over, and again, that's a zero origination fee, which equates to what their rate, that 30-year rate mortgage that they can give you, admin, processing, underwriting fees. That's the best way to do it. So another great way to do this, if this is like, woo, over my head, I don't know what you're talking about, Matthew, well, why don't you give me a call and I will connect you with some great lenders that have great integrity, have wonderful rates, and it'll do a great job for you. Just so you know, there is no kickback to me. I don't get any kind of referral fee. I'm actually not allowed by regulations to have anything like that. So I can just set you up with a great lender, whether that's a refinance or whether you are looking to buy your next dream home. So anyway, that's a little bit of just education in how the lending world works. There are also kind of two different ways you can go about getting quotes, as far as there are mortgage officers that will work directly with banks or lending officers. Then there's also mortgage brokers, and they actually work with lots of different investors around the country. And sometimes if you have a unique situation, a lower than average credit score, or some kind of bankruptcy on your file, they have different investors that will possibly be willing to take additional risk, unusual circumstances. So you might be better going to something like a mortgage broker who has more options to shop your loan around for you to find you the best deal. The mortgage broker is the middleman, though. I will tell you that right now. They are not the ones going to actually fund or process it. So sometimes things are out of their hands. They will be the person that you are working with. They will be your point of contact, but they are just again, a funnel to the actual bank or investor that's actually funding it with their rules and their regulations. Sometimes that's a little bit more stressful because when it gets close to the closing table and things are going awry, or the underwriter has a couple issues, you have to go through your mortgage broker. They have to go up the chain to the underwriters of their investors, which they have no relationship with and no power or pushover. And so we're really at the beckoning of those investors, underwriters, and things can sometimes get stressful. Sometimes it is the best situation, though, because that is where things are at, and that's who you have to be able to get you a loan. Other idea is you just go to like a local bank or a local credit union in town, and they might carry the loan themselves, and so they might have in-house underwriters, and so the mortgage or loan officer that you're working with actually has a relationship with the underwriters because they might be just a floor below them or across the hallway, and so it might be a little bit less stressful experience. But again, those kinds of banks, credit unions also might have a different level of standards. They might not be able to qualify you for a unique situation. But if you are a high credit score person, getting a conventional loan, a VA loan, FHA loan, you might shop there. Again, have some great recommendations if you need them. If not, no worries. But hey, one thing I'd love for you to do is please like this Facebook post, subscribe. Well, I guess you don't subscribe on Facebook, but follow our page to get other cool information, other cool tips, tricks about the lending mortgage process, but also about house buying, house selling, all that good stuff. So really would appreciate it if you just click that like button. It does help the Facebook algorithm out, and I hope to be a blessing and help you in the future. Cool. Have a great day. Bye.